Is Africa ready to compete in a reshuffled global trade order, or will logistics bottlenecks, tariff tremors, and supply chain gaps keep the continent on the sidelines? Good morning and welcome to another power-packed edition of Business Week. A surprise US-China tariff breakthrough. Who would have thought? It sent tech and chip stocks soaring and giving e-commerce giants like Temu and Shein a fresh lifeline to restock and regroup. Meanwhile, in Africa, Namibia is borrowing a page from Ghana's gold playbook to stabilize its currency, and Germany's solar output just shattered records, spotlighting new winners in the global energy race. But it's not all sunshine. Here in Africa, South Africa's mining sector is bleeding jobs, and Nigeria is juggling tax reform with inflation risks, and the UN warns that global food insecurity is headed into its sixth brutal year. Against this backdrop, Nigeria is betting on bold policy, record GDP growth, and localization strategies like the Nigeria First policy to hold the line. And in today's deep dive, we're tackling the trillion-dollar question: what do global trade and logistics trends mean for Africa's producer platforms and policymakers? I'll be joined by two experts on this topic. Buckle up if you missed the business headlines of the week. Don't fret, I've got you covered. I'm Rolake Akinkunbi-Filani. As always, we start with a look at global energy commodities. Good outlook there for Brent and WTI crude. In North America, Brent was up week on week by 2.69%. WTI was up week on week by 2.95% to close at $65 and $62 respectively. Brent doing well on the back of signs of a truce between the US and China over tariffs and trade tensions. And of course, there's now talk of a nuclear deal agreement between the US and Iran. Gosh, these are highly improbable events which might materialize. So all markets, commodities markets, reacting relatively positively. But don't hold your breath too long, because there's still a risk of a supply glut, especially because we're talking about potential hikes in production from Iran and other OPEC Plus members. So we'll be watching the impact on oil prices very closely. But natural gas was down week on week by 11.38%. RBOB gasoline up, tracking Brent, of course, by 2.39%. Let's take a look at equities markets, starting, of course, locally here in Nigeria. The all share index closed the week at 109,710.37 points, up week on week by 0.9%. Deals were up by 4.31%, but the volume of shares traded was down by 5.98%, as was the value, down by 26%. Market capitalization still creeping up relatively gradually to close the week at 68.95 trillion naira. Let's take a look at African markets now. It was a clean sweep of green across the key exchanges: Joburg, Accra, Nairobi, and Casablanca. Accra and Nairobi recording very, very good and bullish outlooks to the end of the week, up by 4.4% and 5.8% week on week, respectively. Let's take a look at North America there. No surprises here. Dow Jones Industrial Average, S&P 500, and NASDAQ Composite Tech stocks were all positive thanks to the US-China truce on tariffs and trade here. Not a bad outlook, I guess. This is a positive sign, but tech stocks do tend to react very, quite elastic, actually, insofar as geopolitical tensions are concerned. So good outlook there for tech stocks. Now for my top picks from around the world. We start, of course, with the big news from the week: US-China tariff breakthrough. The US agreeing to reduce its tariffs on Chinese imports to 30%, and China in turn agreeing to reduce its tariff on US imports to 10%. Is that an equal reduction? Well, depends on how you see it. However, a 20% tariff on fentanyl from China is still in place. This is a short-term truce. It remains to be seen how this will turn out over the next few months, but at least it paves the way for some talks. And as I mentioned, the impact on tech and chip stocks like Nvidia and AMD reacted very positively to that news. Namibia is planning to adopt the Ghana Gold Program model. Now, what does this mean? Namibia's is one of Africa's biggest gold producers, and in fact, in the first quarter of this year, there was a 20% year-on-year increase in gold earnings. However, it is facing some financial stability headwinds, especially around inflation and the currency. And the idea behind this is to use the Namibian dollar to purchase gold and have more gold reserves added to the government's overall pool of foreign exchange reserves. The Bank of Namibia plans to increase its gold holdings to approximately 3% of its net FX reserves as a way of hedging against macro risks. Now, this idea was borrowed from Ghana. Ghana pioneered, or tried this actually, back in 2020, a gold purchase program using the Ghanaian CD to buy gold, which Ghana, of course, is the biggest African producer, to buy Ghanaian gold. However, Ghana has suspended that program, so it does raise questions about the efficacy in the long term of such an economic strategy. But Namibia, nevertheless, politically stable country, just a bit worried about inflation and some macro headwinds, is looking at this as a strategy in the short term to also boost, of course, its gold sector. If it's purchasing gold locally from producers, that's a good thing for the supply chain. Now, South African mining, on the other hand, we're seeing a slump in unemployment in the mining sector in the South African economy. The country lost over almost 300,000 jobs, I beg your pardon, in the last recorded round of data gathering by the National Statistics Bureau. And the mining sector contribution to the economy has also slumped slightly. There are concerns around illegal mining in the country, some economic challenges that producers have been facing operationally and within the supply chain. So, unemployment in the mining sector in the country has actually risen overall to about 32% at the last count from 31%. So the mining sector is really under quite a bit of stress in the South African economy. And of course, that's a situation that needs to be monitored. Now, Microsoft is planning potentially to unbundle its Teams application from its Microsoft Office Suites application. If you recall, this tech giant, was facing a fine of about 10% of its global turnover as a result of what EU regulators called antitrust practices by bundling together the suite of products, including Teams, and preventing other competitors from offering products and services to consumers. Now, Microsoft, on the back of the ongoing investigation by European Commission and the consumer regulators, has said it can unbundle the applications from each other. The question is, why didn't it do this before? But clearly worried about fines there in this major push by the regulators. And last but by no means least, Germany has set a new record in solar power generation. Get this now, Germany is generating 47,000 megawatts of electricity. I'll just let that land for a second. 47,000 megawatts from solar. And solar contributes about 11% of total power generation. So that puts it in perspective. It's a new record. The last record was in 2020. Of course, Germany is a major proponent of the European Green Deal and has been pushing alternative and cleaner energy sources for the past decade. And in fact, even German DFIs are no longer funding fossil fuel sources of energy. So major boost to the German economy in its push for greener and cleaner alternative energy. Well, that's it for my top picks for the week. Now let's take a look at our top stories from other parts of the world. In the US, President Donald Trump's tariffs pause has given e-commerce giants Temu and Shein a temporary window of opportunity to restock US-based warehouses and reevaluate their supply chain management. That's according to experts. Previous tariff rates had driven price increases for US consumers on these platforms. Meanwhile, Temu had halted direct shipments from China altogether, leading to some disruptions in fulfilling its US orders. But the recent tariff cut has given them a chance to ramp up shipments from China and restock their warehouses and fulfill existing orders, according to supply chain experts. In an unusually scheduled launch, Samsung launched a slimmed-down version of its flagship smartphone on Tuesday, attempting to keep up momentum in its mobile division in the face of an uncertain consumer landscape and U.S. tariff policies. The Samsung Galaxy S25 Edge is one of the thinnest smartphones available, measuring only 5.8 millimeters and weighing 163 grams. The smartphone will be on sale on May 30 and has a starting price of $1,099, according to Samsung. The Department of Finance in Dubai announced a collaboration with the cryptocurrency platform Crypto.com and says it will enable the payment of government service fees using large-cap cryptocurrencies. On Monday, during the Dubai FinTech Summit, Mohammed Al-Hakim, president of Crypto.com UAE, and Dubai government officials signed an MOU. According to Dubai Finance, after the initiative's technical arrangements are completed, business customers of government entities and individuals will be able to pay service fees using digital wallets on Crypto.com. On Tuesday, Microsoft said that it would lay off 3% of its workforce across all levels, teams, and regions, impacting roughly 6,000 individuals. All things considered, it is perhaps Microsoft's worst layoff round since the company eliminated 10,000 positions in 2023. In January, the business announced a limited number of performance-based layoffs. The representative for Microsoft stated that performance had nothing to do with the recent layoffs. According to a UN release on Friday, acute food insecurity and malnutrition among children will continue to rise for the 6th consecutive year. This will affect more than 295 million people in 53 countries. This was also a 5% rise in the levels seen in 2023, with 22.6% of people in the worst hit areas experiencing hunger at crisis level or worse. The 2025 Global Report on Food Crisis presents a shocking picture, according to Paulson, Director of Emergencies and Resilience for the UN Food and Agriculture Organization. Mr. Paulsing also added that conflicts, extreme weather, and economic shocks are often the primary drivers. Nigeria's economy recorded its fastest growth in about a decade in 2024, driven by a strong fourth quarter and an improved fiscal position. That's according to what the World Bank said in a briefing on Monday. But the bank did warn that persistently high inflation remains a challenge. It also said that bold reforms implemented by the presidency of Bola Tinubu included ending costly petrol subsidies, slashing electricity allowances, and twice devaluing the naira, which have all added pressure on prices. The World Bank's lead economist for Nigeria, Alex Seinat, said during a presentation in Abuja that the economy grew by 4.6% year-on-year in the fourth quarter of 2024, and he pointed to continued expansion in early 2025 based on high-frequency business indicators. The National Agency for Science and Engineering Infrastructure, NASENI, has commended President Tinubu for launching the Nigeria First policy, describing it as a bold and visionary move towards accelerating Nigeria's industrial transformation and economic self-reliance. NASENI's Executive Vice Chair and CEO Khalil Suleiman Halilu gave the commendation in a statement by the agency's Director of Information. He hailed the policy's emphasis on patronizing locally made goods and indigenous solutions, especially in government procurement. And finally, Nigeria's Senate has passed 4 tax reform bills aimed at boosting government revenue, nearing completion of a plan that has faced criticism and pushback from within the ruling APC. After ending costly subsidies and twice devaluing the naira in his first year in office, the president has shifted his focus to reforming the tax system to boost revenue and efficiency. Critics, however, say the measures, which include an increase in value-added tax to 12.5% next year from 7.5%, will worsen economic hardship in Africa's most popular country.